All right, my next guest says the bad news about this market is that many of the sectors are range-bound. But the good news, many of the sectors are range-bound. Joining me now, Market Gauge Managing Director Michelle Snyder. I guess, Michelle, that means like if you do know the ranges, it makes it kind of easier to trade, right?
Well, definitely. And then there are a couple of other things besides that that are more on the good news camp. And believe it or not, it could be that this economy has contracted enough by the mere signs that this trading range means that the small caps, if we look at IWM, has held 170 level. Every time it's tested it, it's popped back up. So I think it makes it pretty clear is that it's very possible that this range will have bottomed out at this point. I'm not saying expansion, but at least we could maybe go and test some of the higher ranges.
Right, and that's good too for risk reward. One of those areas, and I know you like consumer discretionary, XLY. Here's your range, folks. Listen, great support here. There's your resistance point. I feel like if some of these things break out, they could really be off to the races. And in this particular sector, you like bookings the most, right?
Well, yeah, that was something that we've been in for a long time, and it's a clear indication of consumer discretionary. But there are a couple of other names that have really kept this up. Home Depot's in there, Lowe's, and of course we know that the home builder sector has been strong. So with all this talk of recession, we're seeing people still going out and spending a lot of money, whether you want to judge that or not based on savings and all the other stuff. To me, it's just pure simple math. People are out there spending, and the economy is not necessarily doing as poorly as people would like to say that it is.
No, there's no doubt. You don't think about us, though, as Americans. Once you get us going, you don't have to stop us, right? Once we start spending that cash, we're going to keep going, and we got a long ways before we max out those cards, even though I think we will eventually. I like some of your long ideas. GameStop, I want to start with that. What is it about the GameStop, TTEK, which, by the way, reports after the bell, and Cliff? They're different companies. Why do you like them? Let's start with the GameStop.
Well, with GameStop, I mean, obviously, it came on the radar with its meme status a couple of years ago. So we've been in it forever. It was one of our buy and hold stocks that we've had. And I think that it's held up really well. I like the chart position. I like the fact that it has survived pretty much everything. And if it gets over these levels here, it's been sort of struggling between 20 and 22. Another really good range. Breaks out of 22. I think it's something that we should follow.
TTEK, this is a hot sector. This is a sector, at least, that's supposed to be hot for the last 20 years. But we do know it is, and they report after the bell. So that adds a little extra risk here.
Yeah, but it's, again, range, right? So it's been sort of kind of a schizo stock in that it's gone up and down, up and down, up and down. But it's also established a range between like 140 and 148, 149. So if the earnings are good and it takes that out, that would be another one that I like because of the fundamentals and the fact that the technology is very much supportive to the whole EV space.
Michelle, I got Cliff, Natural Resources, got 30 seconds to go. I love these names, and I've made a lot of money in them in the past, but sometimes they kind of go dormant. What's going to spark this one?
Well, again, okay, this is materials. We know that's
right.
Been beat up to a pulp. The earnings actually weren't that bad on it. And it's one of those things that if you believe that we have contracted to a point where we're not going to go into recession but sort of limp along, at these current levels, I think, once again, you have a pretty good risk reward, and it's something you can hold on to. Unless, of course, something really horrible happens, you always have to have stops. But at $14.50 to $15 for this particular instrument, I like it.
All right. Michelle, always appreciate you sharing all of these things with us, and we always learn with you. Thank you very much. And, folks, we'll be right back.